One of the first things you tend to come across when you get into trading is trendline trading. And it's always the same video, a perfect trend line with price bouncing off the trend line, moving higher. The easy ability to get in and out of trades and just scalp wins. But I can tell you this is not how the markets move. As soon as you get into trading properly and you start executing your own trades, you'll quickly find that trend lines break all the time. And that's because price does not respect trends. Price targets liquidity, and it's always the same thing. Higher time frame, accumulation, manipulation, distribution. So if you're placing a trade based on a trend line, when actually you're in a phase of distributing price or manipulation, you're just going to get stopped out. So I want to show you exactly how to get into 2R trades like this, CADJPY short, and how to properly read price so that you can become a profitable trader. So I'm just going to take this away and show you what I'm looking at. This is a 12-hour price chart. We're going to use it to take swing trades, but remember, price is fractal. So this works up and down the time frames. If you want a day trade or scalp, whatever it might be. But we're just going to look at swing trading examples. So how would we plot a trend line on this chart? Let's imagine that we hadn't seen this expansion. So we have 2 swing points right here. So we're looking for price to retrace again and test this trend line, which clearly it does, but it just breaks through. So if you're looking to take a short off of this trend line, you are going to get stopped out. Now, price has shifted above our previous trend line. So now we're looking at a new potential trend. What does price do? It just tags the trend line, breaks through, and then bursts in the opposite direction. And that's because price doesn't care about the 2 lines you draw on your chart. It cares about liquidity. So if I overlay something different, a higher time frame candle, look at the map that gets created. Why has price shifted bullish? It has purely shifted bullish to liquidate a previous candle range, because on the higher time frames, price is targeting liquidity. So this is a weekly candle. This is a weekly candle's range. Price has shifted bullish to liquidate the previous candle range. What has it now done? It has closed inside the previous range. So price has accumulated, manipulated the accumulation. Now we have a higher time frame target for price, which is the low of the accumulation candle. Accumulation, manipulation, distribution. Now you've seen it, you'll never be able to look at a price chart the same way. So how do you actually get involved? Well, price breaks higher. We then see a sell-off, another bullish shift, and then another bearish shift. What does this create? It creates an order block, which is the last buy pressure coming into the market before the sell. What do we also then get? We get a fair value gap. This is an inefficiency in price between candle 1 and candle 3. Price creates a bearish candle, forms the order block, it then expands. This is price reacting to bearish pressure in the market. This creates a void in price. So price tags the inefficiency, fills this internal range liquidity, and the only destination now is the low, the target for price, the low of the accumulation candle. So we can set our order there. We can cover the liquidation. Price has already done its job. It's already liquidated the high. Where do you set your take profit? 2R, clean 2R. Now the beauty here as well is that the monthly is bearish. So there's every reason to hold this trade because price on the monthly time frame is distributing lower. And eventually this turns into a huge multiple of 4, 5, 6R. That's how to profitably swing trade. And this works up and down the time frames. Let's look at another example. So again, tell me how you would plot a trend line on this graph, on this price chart. This is blind 12-hour price action. If you're plotting a trend line here, you're stopped out. If you're plotting a trend line here, yes, you get some entries, but the move is not really breaking substantially lower. You then get stopped out. New trend line, stopped out again. it's almost impossible and it really isn't worth your time. Let me overlay a 2-week candle. Why is price breaking lower? Well, it's liquidating a previous candle range. This is the low of the 2-week candle right here. This is an inside bar. Price distributes very aggressively into the low. There's no trade at this point. We're just waiting to see what happens. Then we get a shift. Also, we get a candle close. So at this point here, this 2-week candle, this is the low of the candle's body. This area is the wick. It has closed inside the previous candle range. What does that then expose to us? A higher time frame target for price. The high of the accumulation candle. Accumulation, manipulation, distribution. This time it doesn't happen in one candle. It literally takes 1, 2, 3 candles. The reason this manipulation gets traded through, because this is also a higher time frame accumulation, manipulation, distribution. Accumulation on the monthly, price breaks below at the open of the new monthly candle, then price, as soon as it closes, distributes to the high. This is how price moves: accumulation, manipulation, distribution. So let me take away the monthly and show you how easy it can be to trade this. From the fair value gap, again, this is an inefficiency in price between candle 1 and candle 3. This time it's bullish. The order block's right down here. So you can take an entry from the fair value gap, and even if you wanted to cover a super conservative stop loss, liquidating the previous candle down here, you've still got to the high a 2.4R trade. And yes, you have to hold this for a while. This is not usually how price distributes, but all the same, it's a winning swing trade. Equally, if I was to show you on the weekly time frame, there are more nested AMDs in here. Accumulation, manipulation, distribution. So you don't need to sit on your hands for Euro USD. You've got another setup within the monthly distribution phase. This is literally how price moves. So my ask to you is forget trendline trading, start trading higher time frame, accumulation, manipulation, distribution. I have a 30 video 3-part series where you can learn this end to end for free. And the great thing is this works all the way down the time frames. So if you want to take this into day trading, it is easy, but learn the foundations first. See you on the next one.